Welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel options trade for free. Please type in the chat that you can hear me. I'm going to assume that you can. And let's move forward here. Let's see. Oh, also post any questions you might have. If you want to post them earlier rather than later, I can get to those. I know that sometimes I'm just ending the broadcast and then somebody throws out a question and I can't really get to it. Sounds good, Kurt. Thank you. Okay, so let's talk about what happened last week with the Earnings Edge. This is my Earnings Edge account right here. You can see the P&L. This is something you don't see with any other instructor on YouTube. You don't see their net liquidation value of their account. So last week we did J&J, you can see here, and I lost $123 on that trade. So the losers are trying to keep them small, which is what I'm doing, and trying to keep the winners big. And the background music's too loud. Okay, let me look at that real quick. Okay, I'll take that down just a bit. Okay, so on the Earnings Edge, my record overall is 27 wins, 11 losses, and 3 break-evens. And since I started the newer exit criteria, there's been 9 trades. My record is 6-3. Now in 2022, this system did 63%, and there were pretty good drawdowns. So there's going to be some drawdowns. I actually kind of minimized the drawdowns recently over the last 9 trades with this new exit criteria. And so far in 2023, we're up 6%, or I'm up 6%. Here's some interesting statistics on this. So again, since changing the criteria, it's been 6 wins and 3 losses. Now my average loss since then is only $173, and my average gain is $966. So obviously we're seeing those asymmetric returns. So 6 wins at an average of 966 and 3 losses at an average of 173. So that's pretty good. And of course, the Earnings Edge is available if you're interested. There's a link in the description. Okay, Premier Level 5. Let's talk about the Premier Level 5. I'll go into that account. So let's talk about that. So here we can see my balance, 33,720, 33,700 and something. Now with that, you started this account with 33,583 at the beginning of the year. Okay, so so far up about 0.5%. So basically at break even this year so far, with the S&P up 4%. So you're going to see with this system, you're not typically going to follow the S&P up. When the S&P goes up, this particular system doesn't necessarily go up with the S&P as fast. But whenever the market goes sideways or down, this makes money. So overall, you end up ahead, you end up outperforming the S&P. So for example, in 2022, the PL5 did 15% with a 4% drawdown, max 4% drawdown. The S&P over that same time period was down 20% and had a 22% drawdown. So vastly outperforms in 3 out of the 4 markets. And then you hit that 4th market where it's a bull market. You don't outperform, but you don't lose money typically at any kind of accelerated pace. Anyways, you always catch up. And we're up about 0.5% so far year to date. Okay, make sure you have any questions. If you have any questions about the PL5, that's where I recommend I would put my money in if I wanted to get conservative. I wanted to keep those drawdowns low. I wanted to keep the nice returns. I wanted to outperform the S&P with low drawdowns. This is where I would put my money. Okay, so let's talk about now the Safe Wheel. Is this where we're at? Yes. Okay, so we're dealing with Uber. Uber has not been my friend, I think, as everybody knows. But it is what it is. So as far as this particular account, again, we started with $5,000. or I started with $5,000 in 2022, January 2022. This account did 21.7% in 2022, with a max drawdown of 4.8%. So that's a good system. Again, the S&P was down 20% over that time period. Now, so far this year in 2022, this account started with $6,085. Now it's 58.28. So it's down around just over 4%, which is kind of like right at the largest, getting close to the largest drawdowns. So this particular stock, hasn't been good to me like Macy's was really good to me. It's just interesting how it just keeps kind of moving either lower or higher, kind of perfectly. So people ask, how can you lose money with this system? Well, I mean, it's not that we're down a lot, but you can see how Uber's just kind of moved kind of perfectly against the system. Like when I sell a put, it goes higher. When the stock was down significantly, didn't give me enough premium, so I got out, and then it jumped higher where I would have made a bunch of money, but I got out. So that kind of little is just perfectly kind of moving a little bit against, but I believe it doesn't really matter what underlying you're using. This is one underlying that I like, and I'm going to continue with it. Now, where am I with the system? Well, last week I sold a put, so I did the traditional wheel strategy where I sold a put, and I either would get assigned or didn't get assigned. Now, Uber moved up significantly, so I did not get assigned, so I was able to keep that premium. But the problem when it moved up is that my hedge would lose money, which it did, but then I also had my $5 call, but the Uber moved up, but not high enough for my $5 call to cash in. So I wasn't able to cash in on the $5 call. So I'm sitting here with this put hedge, and I'm looking to restart the wheel strategy, the traditional portion of it. And right now, the question is this hedge good enough, right? And how do I know if it's good enough or not? Well, the question is, based on the price of Uber and the strike price of this, is this strike price of this hedge, this put hedge, close enough to the price of Uber? So it needs to be within 70%. So I'm going to run some numbers here. So we've got Uber trading at 30.85 times 70%. So 2150. So this put should be 2150 or higher. Let's take a look at what we have to choose from here. We're in this cycle here with 116 days. If it gets to 100 days or lower, I roll it. I typically want to be as close to 150 as possible. So I'd prefer to be in this cycle here. And remember, 2150. So let's just take a look at this. 2150, we're at 20. I can only go to the 2250. But 2150 is closer to 2250 than it is to 20. So I am going to get into this strike price. I'm going to move this hedge into the 2250. But since it's already 116 days, and I'm going to basically start this trade over, I'm going to go into the 144 day at the 2250. So I'm actually going to make a diagonal trade. So I'm going to sell. Let's see here. I'm going to create rolling order. So I'm going to sell what I currently have, and I'm going to go into, where was I going to go into? June, 16th of June. Look at that, 16th of June's already there. And I'm going to go to the 2250. So this is going to be a debit, right? So I should end up here in this expiration cycle, the June 16th, 2023, and I want the 2250 put. I need to move my put higher, closer to the money, because I need that protection. So it looks like 41%, $41 debit, which is not bad. I'm gonna obviously it's multiplied times 3. So let's see here. So I'm going to try to pay as little as possible. So let's move this hedge. Probably not a lot of liquidity here, so I might have to pay a little more than the mid price. Okay. Now we should be holding, yes. So now we have a hedge that is about 144 days out. It's closer to the money. And now we can start the traditional wheel. What's the traditional wheel? Well, that is selling a put, right? So let's talk about that. So with Uber, we're at $31 approximately. Now I want to go into the nearest expiration cycle, the one that expires on Friday. I'm looking at the puts, and I want to get something that is at least 1% of my strike. See, 30, if I went to the 30 strike, I would want to get at least 30 cents in here. It's not available, so I'm going to come down here. I want to be out of money, and I want to get at least 1%. So I'm going to go ahead and go with the 30.50. I'm going to sell that one. The mid price is 40. Maybe try to get 42. I'm going to do one now. Sizing is important. I'm between $5,000 and $10,000, so I want to use one put here and 3 put hedges. Okay, so I've collected $41. Now I want to protect this put hedge in case Uber just shoots up. I want to have some protection because this thing would lose a lot of value. So what am I going to do? I'm going to buy like a $5, $6. I paid $6. Maybe I can get this for $6. I just want to buy one of those. We'll see. It might not fill. Okay, so I'm just going to cancel that out. I'll go in here, pay $4 for this one. Okay. I guess it's not letting me pay anything less than 5. Let's see. Okay. I was just moving that increment down. Okay, so paid what, $4 bucks? So I've collected my premium on the wheel. I'm protected with my put hedge, and I'm looking to have more depreciation here in the near term compared to the far term, and that's where the money is made. Also, the money is made typically when I get assigned and then the stock moves back up higher. That's where kind of the bulk of the money is made. Kind of missed that opportunity a couple weeks ago because there wasn't enough premium, so I just started the whole trade over. Okay, so hopefully I didn't miss anything on the wheel in terms of, the execution there. Now also I want to make available or let you guys know that the safe wheel guidelines, and there's a flow chart of exactly what to do. And so the system is available. It also has the 6 filters that you use to pick the right stock. So those 2 things are available for only $89. So if you want to learn the safe wheel strategy that did over 21% last year, it's only 89 bucks. And there's a link in the description for that. Okay, so let's get into any questions that you guys might have. Shovel, he was the first one here. I think he was in here before I even started before I even opened up my software today. Uma, hello, how you doing? Kurt, thank you for letting me know. Charles, yep, you can hear me. Background music, I took care of that. Let's see. Good morning, Deep South. Kirk, you don't like the music at all? Let's see. I install. Do you have a course on your earnings trades separate from the alerts? No, I don't. I haven't provided a course on that. I've thought about making it into a course, but I like the alerts. The problem with courses, I think I might have mentioned this last week, is that people steal courses and then they throw them online for 20 bucks. And that's why I went to the alert business model, because it can't be stolen. I mean, if it wasn't for that, I'd probably put it into a course. Charles, how much are you charging for your earnings edge? It's $159 a month. It used to be $259, but I dropped it down to $159. So perfect. That means I turned it down correctly. Okay. Wodo G. Does your earnings edge strategy have some type of hedge? The whole thing is a hedge. I mean, the purpose behind it is that it's a hedge, and we're looking for a large move. Am I hedged against a situation where the stock doesn't move? No, that's where we take losses. So we're basically looking to buy a strangle, go long a strangle at a discount. And that's basically what the system does. So we're hoping for a big move, either up or down. So I'm guessing it does to be a P5 system. Yes. Yeah, it does. I mean, it's not necessarily a hedge. It's more of a, let's hope for a big move. Rather than just a straddle or strangle or double calendar, other popular earnings trades. Let's see. No, I mean, this is not really a system where I'm selling premium and then I'm hedged. That's most of the level 5 systems. This one's kind of different. It's not really a level 5 system. It's more of a kind of like a, let's take some risk and see if we can get some big rewards out of it. So it's not selling premium with a hedge. Dave, with the safe wheel strategy, can we take the reverse of your trade at the same time as opening the put, meaning buying 3 calls, selling 1? Okay, yes. The problem with that, or the first thing that comes to mind, is when you're buying calls, you don't typically get that VAMA. Okay, so that's a second order Greek. You don't get that big burst of value. The price of the calls don't. Okay, let's say that the price of the stock moves up. Well, typically the volatility will drop when that happens. Therefore, those calls are worth less in terms of volatility. When the stock goes down, you capitalize on another factor, which is that increase in the volatility factor. And that's why the puts are a better hedge than calls. Kevin, good morning. Wodo, I hate selling puts after a move up in the market like we had the last couple of weeks, but I understand not timing the market. Exactly. I mean, how do you time the market? That's been kind of, I've been doing this for almost 30 years. You can't time the market and manage money around that and be consistently profitable. I'm trying to, some people have shown that they've been able to do it, but they haven't been through all 4 market types yet. So they're like, yeah, it works great when you're in a bull market or grind down market, but have you done it in a crash? Well, what happens in a crash? What did you do that when it was March 2020? No, I wasn't doing that strategy back then. That kind of stuff. I need to see it work in all market environments, and I haven't. Maybe it's out there. Let me know when you see something. But let me tell you this, 99.9% of the people out there saying that they can pick the right direction and manage money around it and be consistently profitable, even though they say they are not. So most of it is totally false, and they know it. And they look at their P&L every day and they see a loss, or they see that they're down, but they hide that. And that's one of the things that, let me talk about this. It's kind of segue into, I have now started to get back into Twitter. So I have a Twitter account now that has become active, and I would ask you guys to see if you can go on there and follow me on Twitter. And I'm at Carl Dom. So please go on Twitter and go to @CarlDom. I put some good stuff in there. I kind of have ideas every day, and I kind of like throw my ideas out there. So I think it might be of interest to people. Plus, you can ask me questions there or whatever too. You can be there. So please go to Twitter and follow me at Carl Dom. Okay, Oren, is there a way to protect the hedge? So I'm assuming you're talking about the safe wheel and the hedge with the safe wheel. And yes, that's why I buy this call right here. It's really cheap. I only pay $4 or $5 for it. And it semi protects the hedge. It doesn't protect it 100% of the time. Like last week was not, the protection didn't kick in and the hedge went down. So, you know, you're not going to get every time. It's not going to work every time. Where can we find second order Greeks on trading platforms? They don't really exist. OptionNet Explorer, which I recommend, the software that I use has second order Greeks on their platforms, the ones that I use. But as far as Thinkorswim or Tastyworks will never talk about second order Greeks, or they talk about Gamma, but I mean, they're a first order Greek level 4 trade systems. They want you to trade a lot. They're all about volume. And that ties into their business model at Tastyworks. And I would say there's nothing wrong with that, but there is, because if they're profitable, they are profitable in 3 out of the 4 markets. But when that 4th market comes in, now what? Hey, Will. So wondering if the safe wheel could be safer if we start the cycle with 100 shares and start with a cover call. Yeah, we talked about that before. That could be true. I do like to pick up the premium on the put because typically the puts are more expensive. So in other words, I might get a better deal. Like the puts cost more in relation to the calls. So I do like to take advantage of the put premium. That's my first thought. There's probably other reasons. I can't remember the other reasons off the top of my head for not starting with a cover call. Dave, in the Trader's Edge, Earnings Edge system, right? Are you buying the trade for a debit or selling and taking a credit? It's a debit trade. So we put it on as a debit, and we try to sell it for more than what the debit was. So it does have negative theta, but we try to mitigate that negative theta as much as possible by selling some short-term stuff. Will, nice, Carl. Glad you got a Twitter. Can you add it to your About tab on your YouTube? Will, you always come up with these great ideas. Let me write that down. Twitter About tab. Okay. Or in the description of your video. Yeah, description. Yeah, I need to put that. I'll add that to the description of this video, and then it'll be in the description of all my videos. And maybe send it to your mailing list. Yes. Why didn't I think of that? I'm just gonna, whenever I need ideas, I'm just gonna get Will. I'm gonna call Will. Okay. Charles, if you need to make an adjustment on the wheel on Friday, will you notify us? I would, but I'm not sure how I would do that. Oh, I could probably do it on Twitter. There you go. Let me write that down. Twitter, if I trade on Fridays. Yeah, there you go. Now you want to follow me on Twitter. Yeah, that's how. Thanks for the idea. Dave, also regarding Earnings Edge, you sell the signals because you are scared of copycats selling the course. Yes, true. But everyone, including Bertino, says not to be dependent on other signals or trades. Yep, I agree. There are the downsides of being dependent on others for your trades. and that's just the model that I have to go with because of the problem of people, because of thieves, basically. If there weren't any thieves stealing my ideas and my what I call IP, intellectual property, I would sell it as a course. That's much easier, way easier to implement, just an easier business model. And I've done that model and I've gotten ripped off. So yeah, but I agree with Ron for sure. But the goal here is to for me would be to get my account up to 30,000, and then again, yes, I have signals for the Premier Level 5. If you have a philosophy where you don't want to follow people with signals, then um, I guess you wouldn't learn from me. That's just the way that's my model. Woodage, have you done any studies for zero TTE type systems? Um, Zero TTE has been around for probably longer than what people think. I mean, it just became kind of semi-popular recently over the last year or so, but they've been around for a long time. Have I studied them? The thing I don't like is they tend to be, I mean, they're kind of similar to what I'm doing with my earnings edge. I mean, it's like all or nothing kind of within a short time period, right? Have I done extensive studies? No, I think some of them work okay. But again, I have to see them work through all market environments. And I haven't done in-depth studies personally and back tests on them. No, I haven't done that. Lauren, if on Friday, near the end of the day, if you see that the stock is far from the put and the call, would you open on Monday on the Monday options? I'm not sure I understand what you're saying. The only thing I would do on Friday would be to sell my long call if, for example, Uber goes over $33.50. Let's say it's at $33.75, and it's at the end of the day on Friday. It's getting ready to expire. I will sell it and take my $25. I won't do any trades on Friday other than that. So I only trade on Mondays. I hope that answered your question. Well, thanks, Carl. I was also your idea guy when asking you about making a Twitter account a few months back. Really, I don't recall that you said that, but you probably did. Glad to give back for your safe wheel. Thanks, Will. Maybe you did say that. I just didn't. I felt like at the time it wasn't the right move, but now I feel like it is. Okay, Dave, will someone be able to learn the earnings edge, not the trader's edge, the earnings edge, and how to do it by himself after subscribing for some time? You'll get the concept. You probably get about 85, maybe 90% of how to do it, but there's kind of that little last 10% that I leave out. But I mean, if you're really an independent trader, an independent type like me, I could take someone's trade and tweak it the way that I like it and make it better. That's what I did with the earnings edge. That's how I found the earnings edge. And would someone be able to learn the level 5 after subscribing for a while? I would say if you're really good at trading, you might be able to eventually pick up on the Premier Level 5. You got to be pretty good. That one you could probably pick up on, or you could actually at least pick up on it to a level where you could trade it yourself and be profitable. You might not be trading it exactly like me, but you would be able to make your own trade plan out of it. Woodage, thanks for your channel and knowledge and sharing. I watch you weekly. I trust this channel. Thank you, Woodage. I mean, there's my P&L. I'm trying to get other people to do this, but the reason why they don't do it is because I believe that they're not profitable, or eventually they will not be profitable. I mean, everybody has their day. but not through all four market types. It's very difficult to have a trade plan that works through all four market types. That's what I offer based on back test and forward test. 27 watching, 12 likes. Come on, guys. Oh, yes. Please like and subscribe. I appreciate that, Walter, for bringing that up. That helps my channel grow. It helps other people learn about it. There's not a lot of people that know about my channel, unfortunately. I'm trying to get the word out. I'd appreciate it if you guys hit that like button. Uma, definitely trust Carl channel. Thanks, Uma. I appreciate that. Okay, guys. Are there any other questions? Don't forget to follow me on Twitter at Carl Dom. Okay, I always like to leave with this. If the P&L is not real, what else are they trying to conceal? I'll be back next week.